But why take it from me? Let's bring in the gentleman who joins us usually around earnings, but is joining us about a month in advance, Lance Fritz, the CEO from Union Pacific and president. It's good to have you here, Lance. It's good to see you.
Thank you, Adam, and thank you for hosting us. And you mentioned the second quarter was a heck of a second quarter, and we're in pretty good shape in the third quarter as well.
So let's start generically, because you are a bellwether for this economy. You see what's going on in shipping. And in that second quarter, bulk commodity revenue was up 19% year over year, grain shipments up 12%. The one thing we talked about, and I remember when we did the earnings call with you, when you came on the show in July, we talked about the fact that automotive, it was up 119%, even with the shortages with semiconductors. Where do we stand now as we're just about to finish this third quarter?
Yes. So what we see is in the rail industry, for us specifically, the heat, the very top side of volume has kind of calmed down a little bit. We think the underlying economy is still very strong. Consumers are sitting on a lot of cash. We think the automobile industry, absent the chip shortage, sees fundamentally strong underlying demand. The housing market continues to see pretty strong fundamental demand. So it looks like a little bit of the heat, the top side of the economy is cooled off just a touch, but it's hard to say that anything but a really strong underlying foundation still exists.
In the last quarter, your freight car velocity declined roughly 6%, but your train length, the average train length, was up 9%. As you're going in through this quarter, what are you seeing that you can share with us, and how should we as investors looking at, trying to determine what it means, what does it mean?
Adam, when the network's really running well, what our investors, what all of our stakeholders should see is a really nice, strong car velocity, something north of 220 miles a day. They should see car dwell, which is the amount of time freight cars sit in yards, at about 22 hours, give or take. They should see our locomotive productivity be 140-ish, plus or minus, and they should see our workforce productivity be north of 1,000 in that measure. When all of those things are working well, that indicates that the overall network is in really great shape. What we've seen here in the third quarter is that we've had a couple of headwinds, mostly driven by Mother Nature. On the West Coast, we had our I-5 corridor impacted by the lava fire and the Dixie fire, and then we had Hurricane Ida, as well as some monsoon flooding impact us on the southern tier. We're in the process of digging out of that. Our current network is agile and robust and operates well enough to be able to recover relatively quickly. We're laser focused on that. And I anticipate by the end of the third quarter, going into the fourth, we'll be back to demonstrating the kind of performance level that we did early in the second quarter and as we entered into the 2021.
One of the things we talk about every time you join us during earnings is the operating ratio. And the last time it was 55.1%, an incredibly efficient railroad. Are the things you just mentioned going to impact that? Because investors look at that when they're making decisions about whether to buy or sell.
Yeah, our guidance for the year, coming into the year, was 6%-ish growth on the top line. We said 500 million-ish in productivity and 150 to 200 basis points of operating ratio improvement. We modified that in the second quarter to say we think there's 7% or so volume potential. We think the 500 million of productivity is hard to get, but it's still there. And we think that we're going to be more like a 200 basis point improvement in our operating ratio. We're sticking with all of that guidance. It's getting harder on the top line, given the impacts that we're seeing and a little bit of slowdown that we're seeing on the top line growth. We think productivity is going to be harder to come by because of some of the things that we've had to do in order to overcome the impacts of Mother Nature. But we still are very confident we're going to be able to get that 200 basis point improvement in our efficiency.
You also have to deal with the Biden administration's executive order on infrastructure. And this goes to something in the railroad industry called reciprocal switching. Here's how the Wall Street Journal described it: the practice in which railroads can be compelled to share access to their tracks with competitors. There's a huge switching yard. It's not part of your system. In Elkhart, Indiana, I used to drive by it all the time on my way to work at WSJV. How is that impacting you, the threat of this and other railroads?
Yeah, Adam, I'm so pleased you asked about it. So this forced open access is kind of similar to if you had a McDonald's franchise on one side of a road, have the access to the grill at the Burger King on the opposite side of the road whenever they want it. It really makes no sense in our economy. What it would do, practically speaking, in the railroad industry, current interchange is done at areas where we've invested significant amount of capital. We've got an agreement on where we're going to interchange cars, and it's done efficiently. If that gets blown up and opened up to wherever any customer would like to have that interchange occur, it puts interchange into places where there is no investment, where it's not efficient, and it damages the overall service product for our customer base. The worst thing about that, Adam, is right in the time where we're trying to put more on rail to resolve or at least help address global warming and greenhouse gas emissions, we'd retard the ability for the railroad to provide the service product that attracts traffic. And instead, it would start moving back over to highway and create more greenhouse gas emission. So it's just fundamentally not a sound idea.
Do you think that, and I want to be quick with this because there's something else I want to get that's fun to talk about, but do you think that this is going to stand, or do you think it's not going to actually happen?
I think it's been talked about for quite some time. President Biden isn't the first one to bring it up in his executive order. That topic has been in front of the Surface Transportation Board for years now, and it hasn't had action against it because it is a complex topic. There might be a way to get at some of what the STB is trying to satisfy in terms of the way they see the competitive dynamic. But largely speaking, open access mandated in the way it's been talked about to this point just doesn't make sense.
Lance, I want to switch to something fun because I think everybody is a little kid at heart, and who doesn't love running to the window when a train is going by and trying to guess the color of the caboose? But you have, it's what, an 80-year-old locomotive that rolled out again just recently. It was totally refurbished in 2019. This is, what do you call it, the Big Boy 4014? Tell me about this thing.
Yeah, the Big Boy is one of about 20 or 25 locomotives back in the day that we had built to handle the grades on a particular part of our railroad. They are the biggest steam locomotives ever produced in the world. And this one we refurbed. It is over 1 million pounds. Think about this. It weighs more than a fully loaded 747 with passengers and luggage. So we took it out to show our communities. We took it through 10 states over 34 days, traveled about 4,000 miles. And in some locations, we had crowds as big as 40 and 50,000 people. It's just a great ambassador that reminds the communities that we serve, all of our stakeholders, the grit, the ingenuity, the technology, and the sheer size and power of the freight railroad that we call Union Pacific. We're very, very proud of it.
Lance, when you said 1 million pounds, all I could think of is that's my current weight after almost 2 years doing this from home and eating too much. Lance Fritz is the president and CEO from Union Pacific. It is always good to see you. We look forward to seeing you in October when you report third quarter earnings. All the best to you and the team at UNP.